You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with hopefully your favorite bi-weekly options program. Yep, it's time for the old OB. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you're liking our new time here, new bat time, same bat channel. That's what we're pretty much telling everybody. So if you know how to get us in the usual outlets on the website, via your iTunes or Stitcher, wherever you get it there, via our mobile app, that's all the same. That hasn't really changed, except you might get your show a little earlier, which is nice. But on the Mixler, of course, if you want to join us live, that is noon Central now, every Monday and Thursday, 12 p.m. Central, 1 p.m. Eastern. How about that? Crazy new time here. But yeah, we get to come to you a little bit during the day, which is a little bit different instead of after the close. So we can kind of take a peek at how the markets are unfolding right now as we speak. And of course, however you get us live after the fact, app, whatever you use to get us, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And joining me on the show here for this, I believe it's our second same new bat time, same bat channel, noon p.m. Central show here is who we got here. Let's spin the wheel. Oh, let's start off new time. Looks like Mr. Meatball likes this time because he's joining us. Mr. Meatball, welcome back to the Option Block Show.
Hey, how are ya?
How you liking this 12 p.m. Central, sir?
I love it. This is I think everyone's gonna like this better.
We shall see. We'll put out. There's only been a couple shows, so I guess we'll find out when people start hitting us up saying, "Where's my 3 p.m. show? I don't get it." So we'll see. I'm sure those will be coming forthwith. And we are also joined, excuse me, by our old cohort compatriot here, Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show to you as well.
Always great to be here. Excited about the new time. Lots to talk about today as the market's going.
Yes, as the markets are happening as we speak. So let's get to it. Oh, things are happening. It's time for a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. And like we said, we're putting this out now noon Central here, so right smack dab in the middle of the old trading session. And it's a bit of an interesting one, bit of a doozy. We've got tech-heavy NASDAQ in the green, up about 0.1%. And the rest of the major indices shedding some weight today. S&P off about 0.3%. The Dow off about almost 0.5%, 0.4%, kind of leading the charge to the downside. But the thing everyone's looking at right now is the old VIX just taking back the last few weeks and then some. As we're talking right now, it's up about 1.3 handles, or about right around almost 14.5 out there in VIX cash land. We got up ever so briefly intraday to 15.02. So yeah, just for today's range, we have almost over a 3-handle range. Actually got up. Actually, no, it looks like about 2 because we weren't quite in the low in the 12 handles, about 12.95. So about 2 handles and change, but still an impressive range so far for such a short start to the day. Mr. Meatball, looks like turkey and a bunch of other things really spooking some people. So what's catching your eye out there in this VIX Palooza?
Yeah, I think it's interesting. If turkey is the big crisis everyone's worried about, why is the Russell 2000 getting destroyed, and the Nasdaq and the SPOOs and the Dow kind of only down about 0.5%? It's really the Russell and the VIX that are seeing this crazy bid, and I think the VIX is partially because it got kind of oversold, but the this Russian piece is not Russian. This turkey piece, it seems like an odd driver to run VIX.
I had a similar thought. I was looking at this, and I was looking at the way the different indices are playing out today. And you're right. It doesn't. You don't look at this and
feel like it should be turkey.
Doesn't scream turkey to me off the top of my head. Oh, turkey again, causing all this madness.
Those U.S.-based small caps are getting wrecked by turkey.
Well, I don't know if you know this, but many small caps in the U.S. Do their business in Turkish lira.
Where there is some guys getting burned, the emerging market index is down 1.8%. So EEM getting slapped around. Even EFA, which is more like the S&P, is off about 0.5%. So there is, if you're looking for a reason for the market being, the VIX moving the way it's moving, is you're maybe seeing some emerging market people hedge in VIX, and you're also seeing just some soft Russell 2000. But I don't see a lot of reasons for a 15 VIX based on the movement we've gotten over the last 2 days.
One thing I can think of that's driving is I took off a lot of my VXX downside. So that must be why it's rally hoeing. It just decided, hey, I didn't get it all. So there you go. That's why it's rallying, just to accentuate the positive a little bit there today. Mr. Uncle Mike, same question for you. A lot of weird stuff going on. Gold breaking to the downside. Oil having some issues with Saudis. All kinds of weird stuff. VIX popping. Markets kind of mixed in a weird way. What's catching your eye out there today, sir?
Yeah, these are kind of weird intraday numbers, to say the least. We definitely have a lot of movement in VIX as compared to the movement in the S&P 500, to say the least. But it seems like everything that you read about in the financial news media right now just has everyone is talking about Turkey, how the president of Turkey, I don't know if he's the president or the prime minister or whatever. That the big boss man of Turkey,
the dictator.
There you go.
The turkey-tater.
The turkey-tater was talking about
the tater tot.
Yeah, he's on fire this time of day. His coffee hasn't worn off yet from the morning. But the big story that you keep hearing about is how the head of Turkey is complaining about the Trump tariffs and how he can't. I think one of the quotes he had said was he can't just wake up one morning and decide to dictate tariff policy. But he woke up many, many mornings ago and decided to dictate the tariff policy on steel. So that's one thing that is rather befuddling is that why is he complaining about sudden tariffs with Trump when he's been tariffing a lot of things for a long time? So I don't think that I really don't see Turkey as a major economic player in the world markets. So the Turkish lira being the big story of the day, it kind of feels to me like the general financial media is just kind of grasping at straws, trying to make sense of it all. When I guess just my take on it is that we came really close to all-time highs and maybe a 1.5% pullback from where we were a week ago really isn't that huge of a deal. And I don't know if I would necessarily call the Turkish lira. It's not. I have to be honest. In the 15 years I've been at this, I've never been up late at night worried about, well, what's the Turkish lira going to do tomorrow?
No, I'm with you, and it's interesting that this is the first rally where I've seen the financial media actually openly rooting for a sell-off. It's a little strange. Normally they're really looking. They want a bull market because that means higher ratings, but maybe they feel like they need a sell-off right now. But I'll tell you, I'm with you, Mike. It doesn't. This seems like a huge VIX overreaction, and it just a little strange. But that's the way things are sometimes. There are some fun and interesting bright spots that are worth trading. But I don't even see any softness in European banks, really. You know, the Deutsche Bank is off a couple of percentage points. Credit Suisse, I guess, actually, the European banks are soft. And that's maybe where the market is seeing its sell-off from. I don't know what kind of Turkish exposure they have, but that seems to be the issue here.
I think you hit it on the head when you said overreaction, because, where are we right now? We're almost mid-August here. All the institutional guys in France who sling the VIX and the SPX are all not at their desks right now. They're in south of France or somewhere else. And so all the scrubs are manning the desk right now. And they've never seen a Turkish lira crisis before. So they're just crushing everything. So that's what it is, pretty much. It's the scrubs are at the wheel, and we're all seeing the ramifications as we speak. Looking here to what's going on here this week, kind of light so far from earnings. A lot of names coming off, just not a lot of the big names you watch. Cisco, Uncle Mike, cover your ears. They're coming out after the bell on Wednesday. Another Cisco before the open today. The other Cisco, the SYSCO kind, coming out before the open today. Got Nvidia, name a lot of people watch these days after the bell on Thursday. So maybe we'll talk about that one a little bit on Thursday's show. According to the earnings whisper folks, they're looking at some names that are pricing in some juice here, just from net implied volatility perspective. They've got, what do we got? We got Tuesday, we've got SORL, that is Sorrel or Auto Parts Inc., a $5 name, pricing in about 34%. We've got Remark Media, almost 50%. I don't know, let's see, the ticker symbol mark, let's see where they're these are all cheapy names they're quoting to us here. That's why they're doing this. So yeah, a lot of cheapy names here, getting off some. JCPenney, another cheapy name. Pricing in about 20.5%. They're right around $2 and change right now. They're popping off on Thursday. So, you got Walmart, of course, on Thursday as well. If you're into such things as the retailers, got Macy's and Home Depot Wednesday and Tuesday, I should say, respectively. So a lot of things popping off there. Speaking of popping off, we were talking last show about the numbers coming out of OCC. Did you guys see this write-up recently about how the SEC and CFTC are digging into OCC a little bit, which is kind of interesting. Of course, OCC, the big clearinghouse here for the options market, and they're saying their new investigations here are looking for essentially how they're looking at their quote-unquote systemically important standards that they have here. Obviously, the OCC is what's termed a strategically important financial market utility, a.k.a. a SIFMU. What a fantastic acronym that is. And so apparently they want a little bit stricter controls on that sort of thing. They're saying the average size of margin breaches in Q1 of this year was 61.5 million, up from 26,000 at the end of 2017. That's a multi-year high. So that spooked them a little bit. But then again, February, Q1 of this year, I think to call it aberrant is a bit of an understatement. It was quite the outlier of outliers. And so if they only had that hit, and of course we saw a lot of big funds blow up, well, maybe not big, but decent sized funds blowing up there as a result. So that obviously impacting that number. So if in all that turbulence, 61.5 for breaches, that isn't the worst thing that I've seen out there. And let's see here. They said that they expect some breaches where there are extraordinary events, and I think that's pretty fair. It was a pretty extraordinary event, but otherwise, obviously, OCC still functioning, still clearing, still doing everything that they're supposed to be doing out here. So interesting stuff. I don't know, Mr. Meatball, does this surprise you that SEC and CFTC are sniffing around OCC these days?
No. I mean, I guess usually regulators stay out of other regulators' business, but OCC really only clears one kind of future. Maybe, I could see why the CFTC would say, hey, well, maybe this isn't your turf, and get involved. But I seems a little odd. But what are you going to do?
It is odd, but yeah, right. CFTC, they have very little dogs in that fight. There's VIX futures. And that's kind of it. There's some Bitcoin futures in there, obviously, but they're not doing the size numbers that everything else is doing. But they're doing all right. So I guess the combo of Bitcoin and VIX futures is what the CFTC is concerned about. But everyone's digging, post-VIX manipulation fracas there, that everyone's digging into all sorts of what they term to be interesting issues on the margin and everything else side. Speaking of interesting issues, the big story everyone's going on about these days. It was about a week and change ago. I forgot when it was, when our old friend Mr. Musk coming out tweeting about how he's going to take Tesla private, and the funding was all secured. And of course, people quickly did the math and realized that's about $72 billion, somewhere in that time frame. Not a lot of places you can go to really secure that amount of funding on a whim. You know, there's a handful of places to do what is effectively the largest LBO by several orders of magnitude ever done in history. So people obviously went sniffing around to the usual places, including Saudi Public Investment Fund, who has about a 5% stake, I believe, in Tesla right now. And they said, hey, are you guys interested in actually doing this and financing this offer? Because where else is he going to get the money at this point? And they pretty much said no. And so that's kind of been a big blow to a lot of people out there who were super excited about this notion of it going private. Of course, the SEC taking a little bit of a dim view on that as well. Look at everything these days, SEC. Getting a little active out there these days. Not liking the fact that he's talking up his financing deal without any more specifics or anything like that. Just saying that funding was secured. They tend to take a dim view of those sorts of things, and I tend to agree with them on that one as well. They also said that some other big investors, Fidelity and Tencent out of China, they have equity stakes. They could potentially roll some of that in as well to the new deal. So Musk kind of pushing back on that now, saying, oh, no, you know, they're still interested, that they're the ones we have. So he's kind of pushing back on some of this early reporting that says that they were not interested in all that. And, of course, all of that leading into a little bit of a sell-off day out here, about 0.7% in Tesla, which, if you know anything about Tesla, 2.5 handles, it does that before your morning coffee, so that's not really that big of a deal. Hovering right around 353, a little bit shy of that right now. Decent number of options hitting the tape, about $1.40 on the tape already, as ADV is 243,000, so it seems like it's going to be a pretty brisk day. We'll get into all that, but first, Mr. Meatball, Mr. Uncle Mike, any thoughts on this ongoing brouhaha? Where the hell Musk's going to get $72 billion?
Oh,
I think Sebastian's investing in it. I knew it.
That's
but
amazing.
It is. But I think that here's what I think he's doing, actually. Let's say he were to get this. I don't think he will, but let's just say that he were. I will bet you anything within another 2 or 3 years, he would take the company public again and try and continue to keep doing this pattern. Innovation in driving up the stock price in that methodology, nobody can argue with the genius of what this man has come up with for making his stocks go higher. He had a company he didn't like. He sold it to a company that he had his solar company that was not performing. So he just swallowed it up by Tesla, where people were buying anything. So there's just a lot going on in terms of how this man is getting things to go higher. And if he were to pull this off somehow with taking Tesla private, I predict it'll be public again within 2 or 3 years.
I don't know who would want to own Tesla for $420. It just makes no sense. You have so many bond problems. They're flying through cash.
Well, we said that, myself included, back at 220 or 120.
Well, I know. But, it's one thing for the stock to keep going another up. It's another for them to take the entire thing private and take on all that debt and to get an investor to pay a 20% premium on a massive debt bomb. You know, this rally is as much just kind of short covering as it is an actual thing. And I'm sorry, but funding secure, and I've had conversations with Saudis, do not seem to be the exact same thing. I think I don't know. I'm not a regulator. I don't play one on TV or on the radio. But to me, that seems like he's setting himself up for a real problem this time, especially since he just bought a bunch of stock a couple of weeks ago.
Yeah, the SEC doesn't play when it comes to that kind of stuff. If you're tweeting out very deals are done, financing in hand, especially to the tune of $72 billion, they're gonna take another look at that. So you're right, his hyperbole may be coming back to bite him. Speaking of coming back to bite, let's see if the put buyers agree. It is time to open up the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we break down all things weird, wild, wonderful, whimsical, head-scratching, and bizarre in the world of options. Let's kick it off as we always do. We're just talking Tesla, so let's see if all this recent news has been driving action in our old friends, the mystery puts. And spoiler alert, yes. The answer is yes. The stock off about 0.7%, and these things are lighting it up kind of across the board. I don't care if you're looking at the Jan 2019 pars that are about 400 of those on the tape today, about 34,000 open, almost 35,000 to the 50s, which is where we kind of started our investigation way back in the day. 500 some out of the tape there, 62, almost 63,000 open on that strike. 35 is active, 200 all the way down. But the interesting thing, this is coming up this January, listeners, the 10 puts. Doing 2,152 contracts today on open interest of 11,677. That OI has exploded just in the past, less than the past week, actually. It was a week ago. The OI was about 4,000. They were up to over 11,000. We've seen thousands of these things trading, 2,000 on the 8th. We saw about almost 5,000 going up on the 9th, almost 700 on the 10th. 2,000 on the tape so far today. So people piling in to the OI on the Jan 2019 10 puts. So apparently someone, at the very least, not buying what Musk is selling or concerned. Of course, at that point, the 10 handle, that's not quite VXX Jan 10 puts. Those actually have a chance of having some value. These are, shall we say, pessimistic, which is interesting. So yeah, 2,000 and change. Jan 2019 10 puts hitting the tape right now. OI up almost threefold just in the past week out there in these crazy, funky mystery puts. Let's go all the way out to 2020. Let's see what's happening a little bit farther out, a little bit more reasonable time frame. The 50 puts in Jan 2020 doing about 200 some odd, 25,000 open interest right now, and all the way down to the 10 puts in 2020. They're also pretty active today. Also seeing 14,000 on open on the 20 puts, which are trading 85 cents at 94 cents right now. So short answer to the long question of are these mystery puts lighting it up right now? The answer is yes to a very large degree, which is interesting. I really want to dig into those 10 puts a little more because those are interesting. Mr. Meeple, I know you're a fan of a Jan 10 put. Have you expanded the Carmen line offerings? Is this you picking up 2,000 of these bad boys today in Tesla?
No, I don't trade in Tesla because it's a stock for crazy people. That is what it is. It is literally like, I'm a crazy person and I want to trade. What should I trade? Tesla. Done. That's the way it is.
It does have a bit of a flair. Apparently, who would buy Tesla at 420? Apparently, at least right now, not the Saudis. So we'll see if that changes. But it doesn't sound like that funding is too secured after all of that. Looking back on our odd block for today, we're going to look back at some other names that we've highlighted on recent shows and see how those trades kind of played out. Let's start off with Rent-A-Center. This comes back to June 18th. So nearly 2 months ago here on the show, we were talking about there was a buyout offer for Rent-A-Center from Vintage Capital. They were going to pay $15 a share. Rent-A-Center went public way back, 1995. So yeah, a bit of a vestigial remnant of those days out there. Still around the Rent-A-Centers. You still see them in strip malls and other weird areas out there. Renting a TV for $50 a month that probably costs $200 for selling it to you for $600 a year ongoing. So not a bad business model, I guess. I guess apparently Vintage Capital liked it to the tune of $15 a share. The stock rallied 22% in a single day. And what we saw out there on that day looked like a bit of a It looked like at the time like a ratio vertical. As the day went on, we saw more size going up, so it made it a little more interesting. At the time, what started off was 1x2 of the SEP 11-13 call spread. Going to look like paper selling one, buying two, doing it for $3.70 and $1.80 on the upside, so doing it for a dime credit effectively. As the day went on, we saw more 11s trade for a total of nearly 1-to-1 going up on that spread on the day. So it could have been perhaps a bit of a weird roll on that side. The spread at the time we looked at it on that day even was about a 50-cent debit to close it. Right now, the stock kind of hovering locked right around the 14.70 level because, of course, it is an M&A deal. So 14.75 or so is kind of where it's been glued, vacillating around that level a little bit. Hasn't really moved much because, they have a deal in place here. So that spread has obviously widened out. We're seeing most of that juice on the 11s right now. Looks like, again, this was pretty much, a lot of it was closing. The 13 calls were open way back on May 22nd for 35 cents. The 11 calls, so they were mostly closed. Let's see, on that trade for that day, it looks like they were mostly closed, whereas the 11 calls only partially closing. The OI went down from 9,000 down to 5,000. So as you might expect, there was a lot of back and forth on the 11 strike on the day when the stock gapped up 22%. As we're going in right now, we're still seeing about 5,000 of these SEP 11 calls. The markets are crazy wide, but you can just look at the stock. The stock's 1470, so 370 on those SEP 11s, and plus some juice, and 3,200 the SEP 13 calls also open right now. So $1.70 plus out there on those bad boys. So it does seem like still like some of those calls are still open, but we had some partial closing. That was a weird one. And it looked like perhaps people taking off some profits as the company just exploded into M&A territory. Unless actually, I say look at the chart, but the chart's kind of locked. Not much of interest going on in this chart post June 15th when we last kind of talked about this bad boy, June 18th. So interesting stuff, Mr. Meatball. I think that's what this was as well. Some well-timed call paper, kind of taking it off after the M&A deal.
It seems so. It seems so. It tain't necessarily so, but it seems so.
It is very seamy paper. Indeed.
It's super seamy.
We should report it to the SEC. Say this is very seamy. They'll say, "What the hell are you talking about?"
I'm sure they would say, "No, we're too busy annoying someone over something that doesn't matter to execute true enforcement on these cheating scumbags."
They're too busy swirling around Musk and OCC these days to.
Well, he's a cheater, so at least they're going after one cheater. There's a lot of other cheaters they need to go after, though.
He does play fast and loose. You're right. They need to rip a whole swath of the option space a new one. But that's a conversation for another day. Let's move on to, let's see, this trade we highlighted back a few days later on June 21st. This was a put spread in what is IQ. Is ticker symbol IQ. The company is IQIYI Inc. In case you couldn't figure it out, it's Chinese. They are engaged in the provision of online entertainment services. I'm guessing a non-English speaker wrote this description here. Ticker symbol IQ, closing today trading, I should say, $28.61, off about 80 cents or so, about nearly 3%. What we saw back on the 21st was the stock was selling off pretty aggressively back on June 21st. We saw the stock going from $44 on the open all the way down to about $38 intraday. So a nice six-handle sell-off. Apparently the market not liking what they were seeing back then. There was no earnings that day, so I don't know what was driving that particular sell-off. But either way, we saw a pretty aggressive sell-off. And we saw paper looks like coming in and maybe looking to play a little bit of a bounce. We saw paper coming in. Looks like they were selling the July 35-40 put spread. Remember, the stock dropped that day from about 44 to 38. So that put spread suddenly was in the money. They sold it 3,000 times for $2.52. It was pretty sure that looked like that was at least opening on at least some of that stuff. Looking here back on the run that the stock has been on post June 21st. Remember, these were July contracts, so they were only through the third week of July there. So going through that time frame, this spread doesn't look like it worked out pretty well for these guys. They were maybe a little bit aggressive. The stock closed on the 20th expiration right around $33.27. So this spread was in the money. It went from $2.50 to pretty much $5. We did a little digging here to see kind of exactly, obviously, the July 40 puts went out pretty aggressive, 660 at 720. The stock closing at 33.27. The open interest was still about 27, almost 2,800 contracts on this strike. Again, that's an active strike, so it could be some of that was paired off. We pulled up some of the big trades for there as well. And the 21st was the biggest day, where about 7,000 total went up. Actually, the 18th and the 21st are the two big days, 7,000 total on each of those days. Other than that, their only day that they traded a bit was 4,800 again on the 25th after that. So it is possible they took this off on the 25th when the stock was 32.88, but doesn't seem that way given the size OI here. The July 35 puts, same thing, and they did not trade on the 25th. So the biggest trade day for them was the 21st when this trade went up. 9,000 total on the tape. OI was 11,000. And they did print again on the 18th of July. So maybe a little bit to do, but the OI then was 14,000. And then volume was, well, actually the 20th looks like 3,300 did go up on the 20th. So maybe they did take off these last ones. They closed at $1.90 on these things with a spot right around 33.27. So it is possible the 35 puts maybe they decided to stretch in the better part of Valor. Open interest going into the time was 13,000, but on the 20th itself, it looks like they closed some out here. Interesting stuff. Yeah, going into expiration, the July 35 puts were were the number 5 open position. So interesting here. I don't know how I'll have to look into that a little bit. But either way, it looks like they might have taken off the 35 puts. I don't know if they took off the 40s. Maybe they were just too meaty. They were too scared on those. Either way, it doesn't seem like this put spread was exactly gangbusters because the stock pretty much sold off, like I said, pretty much straight away. The lowest it got during this time frame, it's like it got down to about 28.94 actually on the 6th of July. So it seems like Mr. Meatball, they were trying to play with a little bit of fire, sell a put spread into a sell-off, and it doesn't appear, whether exactly they took parts of this off or not, it doesn't appear like this was exactly a no-brainer winner, sir. Would you concur?
Yeah, no, this has been it's had a nice little slow decline since earnings. It took it on the chin in June and then has kind of been on a slow decline. I'm interested to see, and this is a relatively new stock. That's the other thing. This thing just listed in the United States at the end of March. And to be fair to the company, it's up almost 50%, even with this sell-off from that initial listing.
Yeah, you can tell it's pretty new because it looks like the description was written by some guy through Google Translate in like 5 minutes of what the hell.
Yes.
We make internet.
We make the internet.
Before we offend any Chinese listeners, let's keep on rolling to our final review here. This was going back to June, the episode we did on June 4th, a little over 2 months ago here. All sorts of weird names on the show today. This is the Melco Resorts and Entertainment. This is an ADR, ticker symbol MLCO. Closing today at about $23, up today actually, up about almost 2%. So a good day for Melco. But back on the day we talked about it on June 4th, let's see what we were doing here. It was hovering right around 32.5, so about 10 handles north of where it is right now. So, yeah, spoiler alert, the last couple of months haven't exactly been kind to MLCO. What did we see on the day? Looked like we saw a 1x2 call spread going up. Excuse me, it was the July 32-35 ratio call spread. Paper buying one of the July 32 calls, so doing that 10,000 times for $1.55. Coming around, selling 2 of the July 35 calls, so 20,000 of those bad boys for 39 cents. Doing the whole thing, like I said, 10,000 by 20,000 times. Opening on both strikes, so they wanted a nice little run up there where we were. Said it was at 32, so they wanted a nice little rally up to 35, then kind of sit and let all that decay kick in, and that's not exactly what they got. The stock closed around 32 on June 4th, and it pretty much never looked back again from that level all the way through July expiration. So let's look here. How low did we get? How low did we go here? It looks like expiration actually might have been the low. 23.86 the stock went out on July expiration. So, yeah, that's going to leave a mark. 10 handles in your face on this vertical. Long story short, that this thing didn't work out too well. They net ended up doing it for 77 cents, so they lost not quite $1 million, $750,000, let's say, on this bad boy. These positions were open going into expiration as well, so they never closed any of these. There were about 30,000 of the 32s open and almost 23,000 of the 35s going into expiration. So this is what we say sometimes, listeners. Size money, not always smart money. This one, the last couple we looked at actually were not exactly very well timed. Selling a put spread into a big sell-off and then buying a 1x2. Even if you're doing it 1x2, still into a sell-off. Not exactly too great either. So both of these kind of leaving a mark. Mr. Meatball, you're probably not a fan, I think, in general, of like the net short unit 1x2 call spread. So maybe if you want to pontificate on that a little bit, go ahead. And then B, what do you think in particular about our friend here doing 30,000 contracts only to give up some cash?
Yeah, I mean, it's not a terrible trade if you hedge it as it moves, but and I don't like it in something like VIX until after a pop. But it can be an interesting trade if you time it right and if the vol is high. There's a lot of ways where it can be a good trade, but normally I like it as set up as a put 1x2 as opposed to a call 1x2, because then at least you pick up a bunch of skew and you end up with a nice credit. That's usually my style of trading.
Yeah, and put 1x2, your downside is finite, right? Too, you're not gonna.
Correct.
You could still get hurt, but it's not an infinite wipeout the way it could be.
Correct.
On the call one. So if you're doing a call 1x2, would you usually do a call kicker beyond it, like leg into like a funky fly or something like that?
Maybe. I think you've got to be careful with the type of name. I mean, that's the type of trade that you may be doing like IBM, not in Tesla, something like that. It's a good trade for a really boring stock, not so great for movers and shakers.
Hey, you do that in a bio.
But yes, and then long term, I would kick into the call kicker, but a lot of institutional people do not do that.
Yeah, we don't see that follow-up leg very often. So yeah, long story short, maybe not a great trade for a $3 biotech about to go into FDA approval, or a name like this perhaps. Either way, going to leave a bit of a mark. Or Tesla. Pick your poison out there as we keep on rolling. It's Monday. Time for you guys to chime in a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. Quite simply, it's where we answer your mail. Also, we ask you guys some questions. You guys chime in on those as well. Let's start with last week's question. Pay that bad boy off. We asked you last week, how a week changes things. We asked you last week, VXX finally broken through the 30 handle. We didn't even get to that today. That's in the rearview mirror now. Back over 30, 31.14 as we speak, up $1.20, or I should say handle in 20, about 4%. On the day. So yeah, the upside overreaction, some might say, exaggeration, call it what you will, continues in the vol space. But we asked you guys last week, we said, VXX had finally broken through the 30 handle to the downside. You guys are all we know from your mail, all collectively fascinated with these VXX Jan 10 puts. You hate them, you love them, you want to buy them, you can't stand when people trade them, all of the above. So we asked you guys quite simply, there's a 200,000 open of these things. They continue to trade 1,000 lots for a penny all the time. Would you trade these? Yeah, yes, you'd buy them for a penny. Yes, you'd sell them for a penny. Nope, it's just gambling, or you have enough VXX puts. 56% saying yes, you would buy them for a penny, which is kind of about what I expected. I thought may actually be more because judging by your mail, you guys love these things. 24% saying no, it's just gambling, so maybe some sensible heads prevailing out there. 14% not sensible at all, saying they would sell these things for a penny. I can't get behind that one. And 6% saying you have enough. I think that number in probability is probably a little higher too. I know a bunch of you have gone on your buying sprees on these crazy things. This week's we asked you kind of a very simple question, almost kind of a bit of a demographic kind of just idea. Who are you kind of question, kind of fun. Just we like to know these things every now and then. Not a formal survey by any means, just kind of give us some insight into you folks, at least you folks out there listening and voting on Twitter. And we said, I know more about your level of options expertise. Quite simply, how would you describe yourself to someone else at a dinner party? Would you say you're a current or former pro, so a market maker, someone in the broker space, someone professional in the space? Or are you perhaps, would you term yourselves a retail options whiz? You're out there slinging, looking at all the different screens all day long, trading on multiple platforms, listening to a show like this while you're trading, all that fun stuff. Would you say you're more of a retail options dabbler? Or perhaps you're interested in these options things and you're looking to maybe dip your toes and looking to get started. So we asked you those, just kind of went live before the show, so it's still early days. You got all week here to vote if you have an @options on Twitter to get at us. Let us know your thoughts. I'd be curious, Uncle Mike, we'll start with you. What would you think? Obviously, you can't vote in this. Well, you can, but we know your answer. But what do you think? How do you think our audience is voting so far in the early days here?
I will say a retail dabbler with that. No one ever wants to give themselves as much credit as they deserve. So even though I think they're above the level of dabblers, most of our listeners, I just think out of the fact that most of our traders try and stay humble, or most of our listeners try to stay humble with what they do, I think they're going to be claiming the dabbler status.
A lot of dabblers floating around out there. Interesting. Mr. Meatball, same question for you. How do you think our listeners will rank themselves?
They call themselves active retail.
So retail options whizzes?
Retail options whizzes.
That's our
terminology.
terminology.
If you're listening to the amazing, Options Insider Radio, then you are definitely a huge step above. Yes.
You're above the rank and file.
That's what I think they are, but I'm claiming humility.
Have you met our listeners? They're not humid.
They're not humid or humble.
They're not humble at all. They completely lack humility.
So, because some could be.
We will see.
Some could be in some very humid climes, so I shouldn't speak about the humidity of our audience. But let's turn instead to, again, it's only been about an hour before showtime we posted this, so early voting here, breaking down kind of interesting actually. A little surprising. Current former pro right up there, almost 30%, 29%. Which is kind of what I kind of expected. I know we have a lot of market makers and others floating around listening out there. Actually, the number one, though, is 36% saying looking to get started in options right now, which is interesting. 21% saying they're retail options whizzes, and 14% saying they're retail options dabblers, Uncle Mike's favorites. So a dabbler, just for clarification, kind of somewhere between a whiz and a complete beginner is the dabbler. You trade a few times a month, that sort of thing. You do your covered calls every now and then, maybe a short put, maybe a vertical, something like that, and that's kind of your dabbling. The whiz is bam, you're in there, out there all day long trading. So yeah, early voting, kind of interesting. A lot of pros and a lot of beginners and a decent number of middles. So it's kind of all over the place. I'll be curious to see how this shakes out over the rest of the week because I am interested. It should be an interesting experience. Oh, we got people writing in already. We got Trader Reed, I should say, saying he's setting in something called, this is obviously a confidence interval thing, the Dunning-Kruger effect. He says, if I were at a dinner party, I would say options are complicated and just leave it at that. Probably a good approach. You don't want to bore people at a dinner party. Leave it, stick to things like politics and religion. I find that goes over well at all dinner parties. But he included this graph of what he terms the Dunning-Kruger effect. It's got knowledge in the field going up to the right there on the x-axis, confidence going up on the y-axis, and the zero both would obviously be the level. And then it starts off on the top left where your confidence is high, but you don't know much, saying, I know everything. Then it kind of scrolls down. It's kind of an inverted bell curve going all the way down to there's more to this than I thought. Then gets to the bottom, says it's starting to make sense. But first says, I'm never going to understand this. Then you start curving up, saying, I'm starting to make sense. And towards the far right of the graph, where you're moving up in the confidence and moving up in knowledge in the field, you say, trust me, it's complicated. So I kind of like that progression. You start off, you think you know everything, but you don't know a freaking thing. And then you start learning about the field, and you say, oh, there's actually more to this. And then they kind of, towards the end, you realize you don't know everything, which is probably a healthy way to go through life. Let's see. We talked about... that one came in on vol views, so we can just move on from that one. Let's see. There are here's an interesting comment by CNelsen. CNelsen says, calls, puts, puts, calls. Does it really matter? I guess there's several answers to that question. In the top-down 10,000 foot, put call parity type net units level, no, it doesn't. They're all the same. Calls or puts or calls. Flip them around, add some stock, have fun, go crazy. It's all units at the end of the day. So from that perspective, you are correct. But from the perspective of a lot of the people out there who are, let's say, active in the retail, even institutional, looking for directional trades, yeah, it does, because they're looking at it from that perspective. They're not really hedging. They're doing things with a directional bias. So in that sense, a call is a call and a put is a put. Very different beast. Mr. I almost called you out last time. Mr. Meatball. Puts, calls, puts. Does it really matter?
It does not. They're all synthetically the same except for at expiration and around dividends. So there you have it. And it's the meat. It's the rock ball. Don't you remember? And the meat lobster.
Oh, yes, the rock ball and the meat lobster. We're just going down the iTunes clean rating scale every time we do the show here.
Meat lobster? I wonder what do you suppose a meat lobster is?
It's probably a delicious dish in Maine where they stuff a lobster full of like meatballs, maybe.
It's lobster stuffed with tacos.
I would actually go for that. Sounds pretty good. I'm gonna have to suggest some things to some culinary people up there in the land of Maine. Here's a question. Comes from Ling. Ling wants to know, I've heard some educators say that you should never hold out for the max profit in an option spread trade because that means you held on to it too long. Is this the case? Do you agree? Thanks and enjoying. And thanks. This is an interesting question. This kind of gets back to what I've been talking about a while, where kind of my issues with the way a lot of options are taught is, of course, they show you those max profit and loss graphs, right? Those P&L graphs. And so you look at that. If you're coming at it, you're learning options that way. That's what you're gonna go for. You're gonna go for your max profit every time, right? But yeah, I think most savvy folks out there would probably tell you, you need to aim for some reasonable percentage of that, 50, 60, 70. Some may be getting aggressive up there, 70% of that profit. We talk about all the times on the short side. We don't talk about on the long side as well, but same thing. You can't go for that 100% because guess what? It's going to erode in your face. Mr. Uncle Mike, when you're putting on your spreads, do you hold them to expiration all the time, sir?
I couldn't even tell you the last time I've done it. I mean, the only time I would hold a spread till expiration is I couldn't even tell you if I'm trading in a leveraged account scenario. I couldn't think of any reason to actually do that. The only reason I would ever consider doing it at all is, let's say I was just selling a put on like a wheel trade to get into a stock, and then maybe I got nervous on it and bought another put on it, and then the reason I was nervous went away, and then I'm like, okay, well, this long put's only worth a penny. I'll just hold on to it and maybe get it put to me. But, I mean, unless it's some type of odd, weird situation like that, then I think there's no reason to hold a spread through expiration and go into settlement. Not to say that I've never done it, but it's been at least 10 years since I've done it. And even then, I think it was probably just because of some weird situation like that. I think it's very foolish to do, quite frankly.
So agreeing with our listener here. Mr. Meat Lobster, when you're educating folks on spread trading, what kind of profitability zone are you having them target for?
Yeah, I mean, it's all about what you paid that really matters. Not what so basically if you pay $1, what are you trying to make out of it? And that decision should happen before you execute the trade. If that's not the case, then you shouldn't have done the trade. That's almost always the way these things are set up. So yeah, if I pay $1, I want to make 50 cents and start taking money out from there.
There you go. Long story short, we don't tend to do it. We tend to agree with those educators you're talking about. That if you hold things in general in options, if you hold things all the way to the end, crazy, weird, and sometimes and quite often bad things can happen. So it behooves you to avoid that whenever possible. All right, let's see here. Got another one here. Got good handles this week. Gunpowder Jim wants to know how do you calculate a profit and loss on a ratio spread? So he says, if I buy one call, then I sell two more. Do I average across the three contracts to determine the P&L on the spread? Well, I do. Didn't we? Let's see. I think we had a ratio in the odd blocks. Let's go back and look at that one. Maybe we'll look at a live example here. Where was it? What was this? MLCO. That was the one. It was the July 32-35 ratio call spread, as you remember, listeners. So they bought 10,000 of the July 32 calls for $1.55, and then they sold 20,000. So two of the July 35 calls for 39 cents. And so 10,000 by 20,000, take off all the scary zeros, just go 1 by 2 there. So they paid $1.55, and then they sold two of those 35 calls for 39 cents. So AK, you can do the math there, 78 cents. It all works out to about 77 cents that they spent on that trade. So that's probably the easiest way to do it, is kind of ratio it out so that, you get the one price on each one, that 1 by 1 price on each leg. In this case, of course, you can just multiply by 2 on that price, And you can see exactly, because that's how much they collected, right? They collected 39 cents twice. So that's the 78. And then, of course, you knock that into what they paid, and that's pretty much how you do it. So, yeah, it kind of makes it easiest for you guys just to work it out. You get it down to like what that one-by-one price is. Sometimes that gets funky. You see weird splits and weird prices and things like that. But in general, you don't need to average. I don't know how you would even average between the legs because you're buying one and selling two. That doesn't really make sense. But yeah, in general, you want to get it down to that, that one-to-one price, so you can compare apples to apples. Because if you just look at, I paid $1.55 and they sold it for 39 cents, you're not looking at it correctly because they actually did two of those, which is kind of interesting. Mr. Uncle Mike, do you do a lot of ratios? Any tips you want to give here to our friend? What was it? He had a fun handle. Gunpowder Jim, Gunpowder Jack, something like that. Gunpowder Jim.
Yeah, Gunpowder Jim. I would say, I think
Gunpowder Jim related to Hillbilly Jim?
Oh man, don't get me going now, guys.
You missed his whole WWF rundown last week. It was quite extensive.
I know. Hillbilly Jim, one of my he's got to be one of my favorite wrestlers ever.
I still have my Hillbilly Jim wrestling action figure from when I was a kid.
Hillbilly Jim,
the big one or the thumb wrestler one?
Oh, that was the big one. It was the big
nice.
one.
So no Ultimate Warriors, no Hulk Hogan's, no Macho Mans for you guys. It was all Hillbilly Jim.
They didn't make an Ultimate Warrior one. They made there was one for Hillbilly Jim, the Iron Sheik, Hulk Hogan,
Paul, Mr. Wonderful.
Yep, the Volkov, Nikolai Volkov, and yeah.
Oh, speaking of which, sad news: Jim the Anvil Neidhart died today. Yeah. I just saw that. Sad news.
R.I.P. Jim the Anvil Neidhart.
Heart Foundation for life.
Yeah, we love it here at Option Block, and we're the Heart Foundation big fans.
Yes. We got totally derailed, but ratio spreads. But Jim the Anvil, come on, that's sad news.
That is actually very sad news. But yeah, with the ratio spreads, I actually look at it sometimes if I'm getting a credit for it, what would I get out of it as the credit for the 1x2? But ultimately, I like breaking them down option by option. In my head, it makes it simpler for me. I'm a simple guy. I like pro wrestling. I'm a simple guy. From the 80s, I like simplicity.
Yeah, crazy stuff here. Mr. Meatball, anything to add here on ratios before we keep moving on?
No, nothing to add. I summed up perfectly.
We hit it out of the park every now and then. Let's keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, you guys know the drill. It's where we talk about what's coming up the rest of this week. We kind of touched on a lot of it at the top of the show, actually. We still have some earnings popping off later this week. We got Cisco after the bell on Wednesday. Cover your ears, Uncle Mike. Got some retailers coming out this week with Macy's on Wednesday, Home Depot on Tuesday, Walmart on Thursday, along with Nordstrom's Nvidia, a name you like to watch in the mobile crypto space these days, tearing these days on Thursday. And then, if you're intrigued by the agricultural machinery sector, John Deere on Friday, everyone's favorite. Mr. Uncle Mike, we'll start with you. What are you watching the rest of this week? This whole Turkish lira craziness unfolds?
Yeah, a lot of that. And craziness, I think, is a relative term, too, because this is another cool part about the show being at the time it is. In the last hour, we've gained almost 10 S&P points since we've started this show. So I think the other thing about this show is that people are listening to us, and it's calmed the market a little bit.
Well, I think it's your voice. You have that nice, calm, soothing effect. You know, you're very happy, very tranquil. Sebastian gets them riled up, and then you kind of calm them down, and I'm kind of nice in the middle there. Mr. Meatball, what are you watching the rest of the week, sir?
Yeah, I mean, I think we got to see this turkey thing play out. We do have some earnings that are watching. Notably, Deere at the end of the week is interesting. Walmart is interesting. Applied Materials is also this week. And Nvidia, which is a very, very closely followed stock. All those names are names I would be watching. I don't think we have a lot of interesting stuff in the world of economic data. So I think that's it.
I think that's it for the show as well, listeners. So yeah, another second Monday noon show in the can. Let us know what you guys think out there of the new time, the new bat time, all that other fun stuff over here. Let me just see really quickly before we go. if the voting has changed materially since we started here. Looks like about 31% people looking to get started, 25% each current, former pro, retail options Wiz, and 19% saying retail options Dabbler. So the number is evolving a little bit out there. All right, that's going to do it. Let's go back around the horn one last time, see what everybody's got cooking. Mr. Meatball, we'll start with you. If I want to talk to the meat lobster duo and read some stuff, where should I go? What should I do?
Yeah, just go to our blog, optionpit.com/blog, and check it out.
Check it out, indeed. And since you're checking things out, head on over to stcharleswealth.com, where you too can check out the Foxy website that Uncle Mike has going. Uncle Mike, I'm assuming I'm making all these jokes. The Fox is still there. I should probably pull it up and make sure.
The Fox is still there, and we're going to have some in-person events on protecting what you have coming up in probably another month or so. More information on that in the coming weeks. So if you're in St. Charles and want to learn about protecting your nest egg, stop on by.
Oh, there it is. I see that Fox. It's a very foxy website, Mr. Uncle Mike. I like it. Well done, sir.
Thank you.
Head on over stcharleswealth.com, and if you're in the neighborhood, stop on by. You too can talk, paying for puts, maybe trading some skew, and maybe debate the best WWE All-Star of all time. Are you a Hillbilly Jim guy? Are you a Jim the Anvil guy? A Bret the Hitman? Ultimate Warrior? Who's your favorite? Uncle Mike will debate it for you for hours. Maybe he'll buy you a euro while he's at it. stcharleswealth.com. On behalf of Uncle Mike and the Meatball, or the Meat Lobster, whatever you call himself these days, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. And of course, you're sending in such great questions. Keep them coming. We'll see you back here on Thursday for another live, and stay tuned to the Mixler, because we'll probably have some interviews coming up in between then. But we'll come back at you live noon Central for more of the Option Block on Thursday.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.